Hi, this is Yeho. I'm a corruption trader. It's 10:14 p.m. Japan time, October 27, 2025. Let's take a look at today's market. President Trump has finally arrived in Japan, and the market reacted with a strong rally. The Nikkei closed at 5051 yen, up 2.46% from the previous day, breaking above that 50000 mark for the first time. It's incredible. A 2% move now means about 1,000 point swing for the time to be trading. The PL stands at 19.28, EPS at 2619 yen, both still rising. Meanwhile, the volatility index climbed back to 28.68, hovering again near the 13 level. The yen remains weak around 152 to 153 per dollar. Watching all of this, I feel I might need to change the way I've been thinking. Until now, I have been cautious. The high volatility, the surge in gold, the rise in the GBP, everything pointed to a possible correction. And I still carry the cautious stance, but something tell me the framework itself might need a flip. On the surface, the economy does not look great. M2 is shrinking, power consumption is weak. Normally, that would mean less liquidity and end of the rally. But what if the drop in M2 simply means money is floating into the market, not out of it? Then liquidity inside the equity market might actually be higher than it looks. That's something that data alone cannot show. Inflation lasting this long creates a fear of not holding anything. So people buy stocks not because the economy is strong, but because standing still feels risky. Um, that's why examining the words crash. Maybe it won't appear as an equity chorus this time. I mentioned this once back in June, but even I had fallen into the old frame of thinking. Recent SQs have all ended positive, two consecutive months of over 10% gains, usually in bear phase, a pattern like that would lead to hard drop. That memory is burned into every trader's brain. But in uptrend, we assume upside is capped. 10% is about it. We tell ourselves. Maybe that's another illusion. Maybe this rally still have room to explode higher. Gold surge remind me national currencies quietly, quietly and deteriorating, not because money itself is losing face, but because people are generating more value per minute. That time inflation, everything depreciate relative to human productivity, money, gold, equities, all of them. In that kind of era, crash might not mean price falling. It will mean the opposite, a violent repricing of real estate upward, the way it happened in the 1930s or more recently is hyperinflation economies. So I'm starting to see two phases of a crash, price collapse and value surge, both destroy and balance, just in different directions. My model, based on volatility index and ratios, still flag this as a high risk zone. But here's the twist: Japanese equities now hold massive unrealized gains. The market, makes me them hard to break, and behind every gain, there's a trapped short. The tension could trigger an upside crash. we might be facing the best shock. And this could be what I'd call a time inflation bubble, not hyperinflation, but a shift here. Productivity per minute inflates the perceived value of everything. If Trump's strategy is to stage slow down through government shutdown, certain types, or manufactured mini recession, then push down FED to counter it while launching massive public investment, that's a controlled bubble by design. It inflates time, not goods. And Japan might follow a similar path, less late hike talk and more physical expansion, a global consensus of we are all processing and red light together. Low rise, high spending, shared illusion of safety. Media headlines are Hero Fear Again, Demon 2.0, the reverse is near, but maybe that fear itself is the conditioning. The louder the warning, the more the liberal our collective fixed mindset. Still, I'm aware. Me saying this after months of bearish cultures could mark the exact top. And that's irony for you. It reminded me of March during the Trump tariff shock. Back then, I was bullish until the very last moment, then flipped to short just before the crash. I catched the move, but not perfectly. And this might be another one of those moments where flipping perspective is the only rational act left. So, yes, this is a different bucket. But maybe the key is to stay fruit, to observe, not obey old patterns. Whatever this turn into, I'll keep watching closely. And if you follow my contents, do it with a long good mindset. Stay positioned, stay curious. See you tomorrow.